Investec Treasury economist Tertia Jacobs speaks to us now about the latest monetary policy decision. A good afternoon to you, Tertia. Is this the outcome that the market had expected? Of course, some would have wanted slightly more.
Hi, good evening. As you said, the 25 basis point rate cut was widely expected. One would wish, as you said, also depending on which side of you, a saver or a borrower. But I think a 50 basis point wasn't going to happen in the context of the increase in global uncertainties.
Let's speak more about those global uncertainties. Some were highlighted by the central bank governor, inflation being one, geopolitics, as well as just the political dynamics across the globe, where the U.S. has a new man in the head office.
Certainly. And I think, the risks emanating from there is the unpredictability. To what extent will the campaign policies be enacted? We have seen various commentary, for example, that tariffs on Canada and Mexico will be increased by 25% next week. We will see how that will unfold. And then the big question is, also what will happen to China and whether there could be retaliation. So in that context, even though there is more scope for the repo rate to be reduced, when you look at the baseline forecast of the Reserve Bank, the volatility risk in the external context is just too high to be very bold in any forecasts at the moment.
And what would bold look like given that context? Because the near-term monetary policy forecast by the SARB is one that is quite cautious, and if one would term it as moderate, what then is the expectation from economists around the path going forward in 2025?
So, Tumisang, I think just to dial back, last year, we thought there could be, from where we are now, from the 750 repo rate, there could potentially have been another 50 basis point rate cuts or so. And I think now we're looking more towards 25 basis point rate cuts. And, at the outset, when you had the governor on live there, where they talked about, where he said it wasn't a unanimous decision. 4 of the 2 members, were in favor of rate cuts, which means the other 2 were more cautious. And I think that shows what could materialize in March. The debate about a rate cut will be more intense. So that means there's quite a bit of uncertainty. And the governor also said, there will not be any forward guidance. They will be data dependent. So, we know a lot can happen, over the next 2 months in terms of news flow and decisions on the American side.
Bring it back home. And lastly there, Tertia, what are the benefits for the ordinary South African consumer? It is a 3rd consecutive cut at 25 basis points.
Yes, so I think the set of dynamics at the moment for the man in the street is basically inflation remains relatively muted. We had December's print at 3%. We do expect inflation can stay below 4% in up to the first half of this year. Yes, there could be another petrol price hike coming in, but we're still below where we were this time last year. And then also we have seen that NERSA granted Eskom a tariff increase of 12.7%, which was well below the 36% that they've requested. And then next year, it will be a 5.7% increase. So that will also help, although it's substantial for this year, it will also help to contain inflation more than what we anticipated. So I think from that perspective, with a cumulative 75 basis points of rate cuts, it helps the debt servicing costs of the man in the street, and hopefully there will be more cash available for spending.
Thank you as always for your input. Tertia Jacobs is an Investec Treasury economist there talking to us in reaction to the latest 25 basis point cut announced by the Reserve Bank earlier today.